Howdy folks, Phil Tinsley here, your favorite realtor, and today we are going over the top 5 myths of becoming a homeowner. These items are things that I have literally heard day in and day out since I started my career nearly 12 years. 12 years ago. So, top 5 myths, stay tuned. Alrighty guys, myth number 1. Biggest fallacy in the mortgage and real estate industry as a whole, I need 20% down. That could not be further from the truth. Not only do you not need 20% down, you don't even need 10. You don't even need 5. FHA loan product is the most used product to date, and it is a 3.5% down product, only requiring a 640 credit score. So you do not need 20% down, as a matter of fact. And myth number 2, we're going to talk about down payment. And some people believe that they just can't afford it. They say, well, Phil, I don't have 20% down. I don't have 10% to put down. I want a $225,000 home, or I want a $200,000 home, which is the average roughly here in Indiana. I don't have $6,000 to $7,000 to put down. And that's okay. Now, what I will say is you should absolutely save and have some reserves in the bank. No doubt about that. But there are, as of this recording, 2,451 homeownership programs that allow you as a consumer to take advantage and ultimately become a homeowner. Now, 41% of those programs do not have any type of first-time homebuyer requirement. There are an immense amount of programs available to you as a consumer to take advantage of, so not affording the down payment is really just a thing of the past because there's absolutely so much funding. Long story short, you definitely need to have at least $3,000 to $5,000 before considering purchasing a home, because although you might have down payment assistance programs and things of that sort, there are other expenses that you definitely have to take into consideration. So if you truly feel that you can afford to come up with your down payment, that's not the problem. We need to consider what those other expenses are, being your earnest money, your inspection, your appraisal, and some items that you might want to fix or purchase as a result of, buying a certain home. So lots to take in there, but ultimately not being able to afford your down payment is definitely something that is a thing of the past. There are so many programs out there and available to you. Another stat that I wish to add regarding your down payment affordability, Indiana is one of those states where it is roughly 2% cheaper to make a house payment than it is a rent payment. So 2% doesn't sound like a lot, but let's just go down a yellow brick road here. Let's do some simple math. You spend $1,000 a month times 12. Yes, you get shelter, of course, and a roof over your head, but that's $12,000 a year. 3 years in, you're at 36 grand. 5 years in, you're at 60 grand. And just keep going. Like when you consider renting for 5 to 7 years, you've thrown away nearly, somewhere in the realm of 70 to 100 grand, depending on your average rent. So there's just, again, tremendous opportunity when you talk about home ownership. So when you buy a home, you're actually not only paying down on which the mortgage that you owe, but also you have an appreciating asset. Your piece of real estate is likely going up in value consistently year over year. Whereas with rent, you're throwing money into the black hole, and yes, it's getting you shelter and a roof over your head, but nothing more. On top of that, there are so many varying factors that ultimately are reasonings for wanting to purchase a home, but we can get into that in another video. I'll wait for the market to crash to buy. Newsflash, folks, there's not going to be a market crash anytime soon. Now, I can't predict the future. Of course, we're going through a pandemic right now, but I can tell you real estate sales are stronger than they've ever been. We have an incredible demand in the market as a result of record low interest rates being in the 2s. So you've got an immense opportunity to afford more house than you ever have as a buyer. It just doesn't make sense not to buy a home or not to move into your forever home or your larger home that you wish that you had. This is the opportunity to do that. If you currently own a home, I highly recommend reaching out to a mortgage professional to refinance. If you need a mortgage professional information, I've got several contacts and referrals I'd love to send your way. Myth number 4, I have to pay my real estate agent. Did you know when you're a buyer, real estate agents are actually paid a broker commission as a result of bringing you to a certain property? So each property has a pre-negotiated broker split that is being paid for bringing you that house. It incentivizes us to bring you to specific homes. So what it does is typically those commissions range somewhere in the range of 2.5% to 3%. And again, there are no additional fees outside of that owed to me as your real estate professional. But as a buyer, our service is free. So keep that in mind. You do not have to pay a real estate agent. I repeat, you do not have to pay a real estate agent as a buyer. As a seller is a whole different story. And myth number 5. Let's talk about maintenance and repairs. Many people go, Phil, I don't want to be responsible for maintenance. I don't want to have to repair anything. And I get that. If that's truly how you feel, so be it. You'll be a renter forever. You'll throw money away for the rest of your life. I get it. I understand. You want a hands-off experience where you simply can come home and go to work and not have to worry about anything ever. My recommendation to you is there are some safety nets in place, but my recommendation would be is you are absolutely going to have maintenance and repairs and things that come along with home ownership, but these are ultimately things that can either be prevented through proper maintenance and or will be covered as a result of these safety nets we're about to go over. So safety net number 1, and this is the immediate band-aid in the event that something were to fail. If you were in a transaction today, you could actually purchase a home warranty. The home warranty can and only be purchased with a professional inspection completed. Now, a home warranty typically ranges between $400 and $500 depending on the type of home and the size of home, of course. In addition, those home warranties, they cover your home for up to 12 months. So, second safety net is your homeowner's insurance policy. This actually comes directly out of your mortgage, if you didn't know. So, your homeowner's insurance policy, if your roof, which is a major, major expense, if it were to, say, spring a leak 6 months after living there, or it springs a leak as a result of, say, a heavy hailstorm or heavy winds or something of that sort, your insurance agent will then send out an insurance adjuster to come out, evaluate your roof, and to see specifically, okay, this property, is beyond its normal life, wear and tear, or it was the result of a heavy, a hailstorm or heavy winds, whatever the case may be. Nonetheless, your homeowner's insurance policy will be there and in place for you to kind of fall back on in the event that you experience something of this sort. Now, you are responsible, of course, with both your home warranty and your homeowner's insurance policy. You are responsible for a deductible. But in most cases, after that deductible, you generally do not have any additional expenses. So, those are the top 5 myths regarding becoming a homeowner. I hope that I've helped you in this video. If I have, please like and share because there's other people out there looking just like you. Here's my cell phone number. If you have any questions, please do not hesitate to text me directly. I look forward to talking to you guys in the next video.